Good afternoon, everyone, and I'm delighted to welcome you to our live webinar, Anti-Money Laundering, a new action plan for Ireland and Europe. Very happy to initiate this event and to be doing it today in association with the European Parliament Office in Dublin with James Temple-Smithson and Patrick O'Riordan. Thank you for your support. We're going to have, I believe, a cutting-edge discussion on this topic, on the future of AML policy in Ireland and in Europe. Time and time again, we hear this topic being brought up, and we're at a very interesting point at the moment in terms of dealing with it internationally. I'm delighted to see so many of you joining us today. We've over 500 people registered for the event, and that includes people from a very wide variety of stakeholders. We have our law firms, accountancy firms, financial institutions, NGOs, civic society, and representatives from the European Commission and Irish state agencies. So you're all very welcome, and I hope you enjoy this webinar. In terms of the programme today, we start with Sean Berrigan, Director General of DG FISMA, who will talk to us about the new European Action Plan for Anti-Money Laundering, and then my colleague Billy Kelleher, Derville Rowland from the Central Bank, Assistant Garda Commissioner John O'Driscoll, and Colin Moreland from Citibank. So a great panel, and really looking forward to hearing from them. Some housekeeping first. Please use the live chat function at the bottom right-hand side of your screen to put your questions to the panel or any comments you have to make, and I will try and reach those for the last 20 minutes and put them to the panel. So why this event and why now? Well, this is a very serious issue in Ireland, across Europe. We need to get better at managing it. We need more cooperation, more consistency. And on the 7th of May 2020, the European Commission adopted an action plan for a comprehensive union policy on anti-money laundering and terrorism financing. The proposed changes are probably one of the biggest overhauls of EU anti-money laundering rules since they first came about in 1990. And Sean will talk to us about exactly they hope to do, but it's all about a single EU supervision mechanism, a single EU rulebook on AML, and better implementation of existing rules, and to improve cooperation between FIUs. So we're going to start, as I've said, with Sean Berrigan is the Director General in DG FISMA, the Director General for Financial Stability, Financial Services and Capital Markets Union of the European Commission. Obviously, his responsibility for a very wide area of policy and legislation. He's had an extremely distinguished career. It's great to have an Irishman in that important position, and I'm delighted that he has taken time to join us today. So, Sean, thank you for being here with us today, and over to you.
Well, thank you very much, Frances, and good afternoon, ladies and gentlemen from Brussels. I'm delighted to be part of such a great panel, and also to have the opportunity to share with you some of the sort of options and trade-offs that are being managed by us in the upcoming anti-money laundering reform process here at the EU level. But before I get into what's coming up, I'd like to say a few words about where we are and where we've come from. I think it has been a pretty difficult few years for anti-money laundering at the EU. We have had a lot of, what would say, unfortunate events revealed, some of them dating back from some time ago, but reputationally it has not been a good few years for us. So when we launched the first package in 2019, we were forced to confront what was a pretty inefficient system based on a very fragmented arrangements. And this fragmentation of rules, untimely and insufficient implementation, and fragmented supervisory architecture was leading ultimately to insufficient cooperation, insufficient exchange of information. And this was particularly the case in cross-border examples. And these were where the main weaknesses lay, I should say. And we undertook a post-mortem of a number of cases, as you may recall at that time, and we found that there were problems in anti-money laundering arrangements between banks and their supervisors, and between supervisors, so really across the piece. We know that criminals have been pretty good at exploiting these weaknesses, and I think it's safe to say that they're going to continue to exploit them so long as they are there. So we felt the need to act. So where do we want to be? I think the action plan that we adopted, and Francis mentioned in May of last year, makes it clear that our goal is to have a very solid AML system in place. And this is not only in terms of the rules, which are already quite advanced in the EU, but also in terms of implementation of those rules, where I think we're not doing quite so well. So the action plan is an ambitious one. It's built on 6 pillars, and these 6 pillars have a common objective to tackle the weaknesses of the EU framework from all the possible angles. Some of the actions announced in the action plan actually require changes to the current system that will be of a significant magnitude, in fact, quite fundamental. So clearly, if we're engaged in such an ambitious endeavour, we cannot undertake it alone in the Commission. So our action needs to be transparent. It needs to be as inclusive as possible. And for this reason, on the same day that we launched the action plan, we also launched a public consultation to gather views from all stakeholder groups, including citizens, but also, of course, including expert views. And in parallel, we have opened a dialogue with the European Parliament and the Council on the way forward. And that's to ensure that we can protect our economy and financial system adequately from criminal infiltrations and criminal money laundering. And that, of course, in that way, we address all the weaknesses that we want to. Just a couple of months ago, and at the end of the consultation period, we brought together member states, members of the European Parliament, competent authorities, stakeholders from academia, civil society, etc. All of this, it's how we normally do it in Brussels, to kind of complete the consultation by getting the full range of stakeholders around the table. I think this is quite important because that's confirmed by the Parliament resolution of the 10th of July and by Council conclusions last November. There is, in fact, now broad political agreement behind the need for reform and behind the main tenets of the reform as we are putting them forward. This degree of political consensus is very important, but it's not to say that the reform will be easy, but it's certainly motivating for us in the Commission to know that we have the same goals in mind as all of our principal stakeholders. Now, what should we expect from this package, which we will bring forward later this year? Of the 6 pillars in the action plan, we've identified 3 that will involve legislative proposals from the Commission. And we'll put these forward, as I said, in the second quarter of this year. The first area of reform will be an introduction of stronger rules. In the jargon of Brussels, it means we will move away from directives where member state authorities are left with quite a lot of discretion, indeed quite a lot of discretion in the anti-money laundering space, to more regulation or more direct harmonization, so more direct rules, so less room for discrimination at national level. The action plan mentions a number of areas in the current directive, and we have currently directives in place, which we will move to more tighter single rule approach. And these cover the list of obliged entities, customer due diligence requirements, and all of those could be turned into directly applicable rules, ensuring a greater degree of harmonization of the Union. The consultation phase, I think, has also showed that this move to more harmonized set of rules is strongly supported. It's also supported, by the way, in relation to sanctions for breaches of AML rules, beneficial ownership information, and the setting of limits to cash payments. So I think there's going to be quite a considerable tightening of the rules implied by the new package. Another commitment we took in the action plan, of course, was to introduce EU-level supervision, and this has been this. And the idea here is to ensure that these single rules are, in fact, applied in a uniform fashion. So we have consistently, uniformly high quality implementation. The plan left open various options as regards the powers that the supervisor could have and the scope of its action. The choice of the body that would perform this role would be a consequence of our level of ambition in terms of these various criteria that we would set. So we are listening very carefully to the consultation because we need some guidance in terms of the scope and the powers we would give the AML supervisor. And I think first and foremost what has come from the consultation is the idea that the role of any EU supervisors, any EU supervisor should be guided by risk. This means that the entities to be supervised at EU level should be selected on the basis of the risk they pose to the internal market. So not just a uniquely size-based approach, but on the risks that they pose. As to the scope of the EU supervisor's actions, well, there seems to be an agreement that action will need to cover both the financial and the non-financial sector. But this doesn't mean, however, that the EU supervisor should exercise exactly the same powers over the financial and non-financial sectors. And this was an aspect that was stressed strongly by many respondents in the public consultation. Another important question we need to address is what the role of the supervisor should have in relation to national supervisors, ones that already exist. Now, in the action plan, we already stressed that the goal was not to replace national supervision of anti-money laundering, but rather to bring it together and to complement it. So we're looking, I think, at a kind of hubs and spokes approach in which there will be an EU-level supervision, but it will work together with national supervisors, because quite frankly, combating money laundering is, in many respects, still and will remain a local activity. The third area of reforms in the plan was about financial intelligence units, and this is very important. And here we undertook to provide a mechanism to support and coordinate the work of FIUs. This means providing them with sufficient tools, not only in terms of technology, but also in terms of support for their analytical work. And this will be crucial to support not only the detection of suspicious cross-border flows, but also the analysis of money laundering trends and risks facing not just their national market, but the broader internal market as well. And all of these reforms will not occur, of course, in isolation. We are committed in the Commission, of course, to ensure that our legislation is properly put in place. And enforcement, of course, has now moved up to be one of our top priorities. The action plan also sets out a number of actions to be undertaken on the law enforcement side to strengthen existing EU networks of prosecutors and investigators, and this will be supplemented by guidance on public-private partnerships. And finally, the last pillar of the reform will occur, of the action plan, I should say, is to ensure that these reforms occur in a context of renewed commitment internationally at the EU level to the Financial Action Task Force and through renewed approach to high-risk third countries. So I'm going to stop here, Francis, because this sort of summarizes the sort of areas where we work. As I said, we will bring the proposals to the table in the middle of this year. We have based them on very extensive consultation. They will primarily operate in these three areas of rules, supervisor, and enhanced cooperation among FIUs, but in a broader context where the Commission will be stepping up its enforcement nationally, but also its engagement internationally in the FATF. Thanks a lot.
Thank you very much, Sean. And of course, Sean also represents the Commission on the Financial Stability Board, which reports to the G20 finance minister. So thanks for that, Sean, that overview of the scope and powers and the changes that are envisaged. I'm sure we'll be coming back to that. So our next speaker is Billy Kelleher MEP. Billy is a Fianna Fáil MEP since 2019, previously served as a Minister and TD in Dáil Éireann, representing now the constituency of Ireland South, and he's a member of the Renew grouping in the Parliament. Billy and I work together on the Econ Committee, and he's also a member of the FIS Committee in the Parliament. He's particularly interested in retail financial services, anti-money laundering and consumer rights, and of course, the digitalisation and greening of the economy. So Billy, thank you for joining us this morning. Over to you.
Thank you very much, Francis, and just to wish you well with this webinar. And just to say at the outset, it's very timely in view of the fact that the EU Action Plan, is to be discussed and debated, and more importantly, that we'll bring forward proposals that will be meaningful in terms of addressing the issue of anti-money laundering. There is no doubt, if you look at the history of money laundering, the impact that it has in society, where the proceeds of crime go to, where they come from, it really is critical that we bring forward proper regulations that will obligate member states to ensure that they have rigorous inspection regimes, prosecutorial regimes in place to ensure that the arm of the law, be that the criminal side of it or in the context of financial regulation, can reach in and address this particular issue. When you look at the history of it, money laundering has been around since they have coins in their pockets. But more importantly, since prohibition, probably in the United States, it escalated to an industrial scale. And now with the proceeds of drug importation into Europe, the proceeds of that crime on the streets, the way that percolates upwards to the cartels across the globe in the areas of human trafficking, prostitution. Wherever you have prohibitions, obviously you're going to have people taking advantage of that and then trying to wash the money through the system to try and see can they bring it out on the other side clean. So from our perspective, an Irish perspective and a European perspective, I mean, clearly we are a huge consumer economy, the largest in the world. There is a lot of money flowing around the place. And if you look at the statistics and figures, the United Nations drug enforcement and institution, they have reckoned that they could be between 2 and 5% of global GDP, being laundered annually. So it's a huge sum of money. And bearing in mind, we being one of the largest consumer economies in the globe, well, then Europe obviously is a place where a lot of it is generated and where a lot of it will be spent. So we do have an obligation in terms of the European Union to make sure we have robust anti-money laundering legislation, regulation, and enforcement. And not only just the enforcement, but that we actually allow the people that are charged with that responsibility to do their job with proper resourcing. And if you look at what has happened in recent years, if you look at the Deutsche Bank scandal, for example, the Danske Bank scandal, where there was billions of money flowing through a particular branch, that indicates quite clearly that we are getting very sophisticated in terms of money laundering, that the resources that are being used by these entities is beyond reach in many cases. And if you look at how much money is detected and the prosecutions in Europe on an annual basis, it would also indicate that our systems are not robust enough to, first of all, identify potential risk, then to assess that risk, and then actually identify real live money laundering events. And as I said, the statistics bear that out. So we have a lot of work to do from that perspective. The framework itself must, I believe, include a number of fundamental principles. We can't have a disparate regime or regimes across the European Union. We can't have national competency overseeing some parts of it, the European Union responsible for other parts. And if ever there was a reason, the Danske Bank scandal would identify that as a core problem. People, in other words, charged with responsibility, but unsure of their role in the overall oversight, enforcement and prosecution of money laundering activities. So I would hope that when we finally come to bringing forward regulations, which I would very much encourage regulations rather than directives, because again, there's too much flexibility in the interpretations of directives by member states, and that again could undermine the hope that we will have a uniform and conformity across the European Union. If you look at some of the key issues, and again, this transcends a lot of the financial areas, even in the context of the Digital Operation Resilience Act, DORA, this particular issue of anti-money laundering, right across the financial services. There is a fierce effort at national level to ensure that the national competency is the overseer of all of the financial services. And that undermines our ability in Europe, as I said, to get a centralized, uniform approach to dealing with financial services in general, and no more so than in the area of money laundering itself, and trying to develop a coherent strategy. And of course, the next big challenge will be, you have member states, you will have competent authorities in member states that will be charged with the responsibility of investigating, or first of all observing, then investigating, and then the prosecutorial side of it as well, which will be critically important if we are to have serious sanction and deterrent. And as I said, bear in mind, this is no longer money laundering at a small scale in terms of, some small-time criminal element trying to wash somebody through to get it clean on the other side. This is primarily very, high-end organised criminality, as I said, from major drug cartels to terrorist organisations, right across the spectrum at the high end. So they have huge resources available to them. They can operate and always will operate outside the law. Our challenge will be, how do we operate within the law and at the same time be able to take them on? And a lot of this, of course, will be dependent initially on financial entities like banks and other financial services to identify suspicious transactions, suspicious behavior, and then inform the authorities, and then the authorities take it from there. So an awful lot of this will require very good governance in terms of banking institution and financial institutions, and that training of employees, having robust systems in place at a technical level, using the algorithms that are available now. So all of that will be required in financial services, and then that there's a reporting mechanism into the supervisory authorities, and very quickly the supervisory authorities have to make a call in terms of who they then inform. Is it the police force in a member state? Then they might have to go into Interpol. And I just believe that if the European Union is to be a leader in trying to address the issue of anti-money laundering, well, we do clearly have to have very, very defined lines and obligations on financial entities, on national competent authorities, on the European supervisory authorities, and then in enforcement thereafter in terms of investigation by police forces, by the Interpols and others. So that really will, I think, require a massive mind shift in terms of member state protection of their own individual oversight of financial services. We do need a mind shift in that particular area, and that's the one area I have of concern in the context of the action plan, that when you get to council level, when you get to negotiations, that member states may become protectionist in trying to keep all of the oversight within their borders rather than allowing for a more uniform approach across the European Union. So, as I said, what we then have to do, of course, after that is to make sure that if there is prosecutions, that there's actual sanctions. And that is going to be a major issue in my view, because very often an awful lot of the sanction will be just on people within the European borders. But how do we actually reach to the perpetrators of a lot of this anti-money laundering who may be outside of the European Union? And if there is serious sanction required, well then, you have to look at how do we do that in the European Union? How do we send out a strong signal that if you try to launder money through financial institutions in the European Union, not only will those that are responsible directly in the European Union be held to account, but there has to be some way of reaching into third countries to punish. And we recently passed the Magnitsky Act, for example, which, people might say, well, that's a very noble type of act. But if we were to be more proactive in ensuring that people who facilitate and use money laundering at an industrial scale, that they can be punished in terms of visa requirements, asset seizures, that we make an effort to reach beyond the borders. I think that would be a very strong signal. So look, in terms of this particular conference, we're talking about European Action Plan, but an action plan is only as good as the foundations on which it is discussed. And that is the key issue. We need uniformity. We need regulation across the European Union. We need to ensure that all competent authorities are, moving on this at the same speed, that we don't have a two-tier system in Europe where some countries then are, finding money sloshing through their particular financial institutions because they have weaker oversight. It has to be a definitive, uniform view across the entire European Union. And that will put a huge onus on financial institutions and on financial services in general. And then we need to ensure that we have the capacity to take the information from the financial institutions, give it to the supervisory authorities, and then roll out inspections, investigations, and then prosecutions finally. And as I said, at the end of the day, this is primarily about trying to make sure that ill-gotten gains are not rewarded, that those that ply the trade of drugs, terrorism, prostitution, people trafficking, that they don't have safe havens. And certainly Europe will be failing in itself and as a leader in terms of moral authority if they didn't act swiftly with some of the weaknesses that have been exposed in our areas of anti-money laundering. So look, they will be my thoughts. I mean, there will be certainly crossovers between this particular issue and other areas at the Econ Committee. So we look forward to those discussions as well, but we need to ensure that whatever happens, it's robust, uniform, and does what it says it does, which means an end to money laundering at the scale that has been exposed in the European Union. Thank you very much, Francis.
Thank you indeed, Billy, for that perspective and touching on many important issues there, the international nature of AML, and also that interesting point that Sean raised about the interaction between EU competence and national competence. And I think that is clearly very important, that there's a very good synergy there, and that is, as Sean said, as well as you have said, to be worked out. So our next speaker now, and I'm delighted to welcome Derville Rowland. Derville is the current Director General of Financial Conduct at the Central Bank of Ireland. She's responsible for overseeing consumer protection, securities and market supervision and enforcement, and AML and CFT. Prior to this appointment, Derville was Director of Enforcement and Anti-Money Laundering, responsible for enforcement of issues across all regulated sectors and the supervision of firms' compliance with AML. So we have a real expert here in this area. I'm delighted that you were able to join us, Derville, this morning, and thank you again for joining us. Look forward to hearing what you have to say.
You're right. Is that better? Can you hear?
Go ahead.
Can you hear me now? Can you hear me? Can you hear me? Can I check if you can hear me? Okay, so I'm just going to talk and hope that it's coming through. I first of all want to say I'm delighted to be here. I think it's an extremely important topic. And I think if I just try to focus some of my initial remarks on contextualizing the role of the Central Bank of Ireland in the fight against crime at a national level, I'll then talk about what I see are the significant opportunities in the proposal to strengthen the fight against crime, and maybe draw on some of my personal views and experiences about some of the considerations that might be valuable to think about in setting up the AML agency. So first of all, the Central Bank of Ireland is one of a coalition of actors in Ireland that fights money laundering and terrorist financing. We do not have a role in criminal investigations, but of course that falls principally to Garda, Siochana, you'll hear from them, and the FIU, which is housed in Garda, Siochana. But it's obvious to say that we work hand in glove with them, and we have an excellent relationship at an informal and formal level to develop exactly what this new agency needs to be thinking about, which is the feedback loops. Our role is to supervise the compliance with anti-money laundering and CFT obligations of approximately 10,000 firms across a variety of sectors: large retail banks, payment remitters, e-money providers, right through to insurers and funds. Some of those firms operate internationally, others operate entirely at a domestic level. But we focus on the governance, the risk assessments, the systems of controls that those firms have in place, so they are in a good position to detect, report, and ultimately foil money laundering threats. And we operate ourselves a risk-based approach to supervision, and we apply our most resource to the highest threats or entities that operate in the highest sectors of risk. It's also good to remind ourselves of the benchmarks that Ireland have achieved in respect to the national efforts to combat money laundering. In 2017, FATF opined that Ireland had a generally sound legislative and institutional framework, and that supervision of compliance with the framework was substantially effective. But of course, you've heard from the previous speakers that there are significant fault lines in money laundering. It traverses policy frameworks that are national, civil and supervisory in nature, criminal, prosecutorial, often the provenance of national competencies. It goes into law enforcement, court prosecutions, of course, regulatory oversight, and the firms in financial services are key actors in the system too. So this mix between national and European, and indeed wider globally, puts a very complex and fragmented system in play for effective combating crime to overcome. So for me, we've seen the risk in some of high profitable business being done by banks in a fragmented system, leading to money being laundered at vast scale. We have the threat of increased organised crime and their capability on an online and IT-enabled way, which means we really do have to combat crime more effectively. Now, that's where I see a really strong opportunity in the EU proposals to effect a gear shift in effectiveness, in coordination, convergence, and at the heart of this actually must be the effectiveness of the FIU. I guess I'm drawing on my own personal experience initially as a criminal barrister, where I can see that criminals respect no agency demarcation. They're not particularly interested in your role or your responsibility, and fragmentation is the enemy of effectiveness. Then when I look to actually oversight of some of the support actors in the system, like accountants, we have to have effective oversight of a wide variety of professions that can support us in effectively detecting and deterring money laundering. I then move into setting up regulatory agencies, enforcement and anti-money laundering, and a huge effort in powers, planning, procedure, and of course people will be needed in order to make any kind of new effort work. And that has to be done in an integrated way. And it has to be done with a collective action, all focused on the right thing. And I think what I have seen in my more recent experiences as a participant in European supervisory authorities, with a clear focus on EU-wide convergence, data-informed, and absolutely focused on achieving common and high standards, there's a real chance of a huge gear step forward in this. If I move into some of the ambition in the plan, it's absolutely right that any good plan starts with a good baseline. So moving into regulation to get uniformity, to get rid of unhelpful fragmentation, and focusing on the front line, the things that matter, the things that enable the firms that are particularly in scope, and financial services have a big part to play in helping them do their job well. Uniformity of CDD and those key detection points is really important and a big opportunity. If a new supervisor is set up, making sure that they drive forward a focus on the single rule book, making sure there's high quality, clear application of the rules so that the baseline is established will be very important. And of course, they can augment any of the new rules that are put in place with secondary articulation of more detailed rules. But the most important thing to think about is those kinds of businesses and financial services that present high money laundering risk or operate in high money laundering risk areas and operate on a cross-European basis. And I think there's a strong argument to say direct supervision by a strong and clear supervisor in respect of those businesses that provide goods and services to the consumers and businesses of Europe are well supervised, I think is a first and key priority. And it is absolutely essential that this approach is risk-driven and actually builds on our supranational risk assessments and drives out a risk culture right across all of the competent authorities and into the system. I also think the relationship with the competent authorities, like the central bank, with onerous and significant responsibilities right across the EU 27 in oversight of effective AML implementation in the firms and businesses we supervise, is very important. Right, that there's a collaborative effort here. The legal terrains will be different in different jurisdictions. It's very important that a close approach is kept with the NCAs, because money laundering can be quite local in character, and a local understanding will be very important for effectiveness. It's very important that that new supervisor drives out a very strong, high standards in AML risk culture, but backed up by a very strong enforcement culture too. It can help the competent authorities do that with strong information sharing, pursuing common supervisory actions right across the union, reporting on that, assisting benchmarks to be established, and getting a really strong enforcement culture going. It's very important too that the FIU is brought in to the heart of this new European system. It is the heart of the matter. Our whole anti-money laundering system is built along the idea that suspicious transaction reports identifying suspicions of money laundering are quickly transmitted to the FIUs for dissemination into the right authorities. So making sure these feedback loops and the harnessing this information and the utilization of it is operating in an inclusive, coherent, virtuous circle so that we can be more effective in the fight against crime is mission critical. That's giving feedback to FIUs. That's working public-private partnerships with industry to make sure there's correct and appropriate intelligence sharing typologies, lessons to be learned. Of course, data protection considerations will need to be respected, but the public interest imperative is overwhelming in increasing effectiveness on that particular front. And again, the feedback loop with competent authorities, informing them about the firms and businesses that are doing a good job, looking at the peer analysis to see where the outliers are, so targeted resourcing and risk-sensitive approaches can be applied to the firms that aren't where they should be. Of course, this new regulatory authority needs to have teeth that can bite directly with the firms it supervises itself if they're in breach, but of course with competent authorities with whom they will have a hand-in-glove relationship. But if the competent authority is not doing its job, it's important that that Central European authority can take action there too. I also think it's right to say that globally and in FATF calling out, there is a problem perceived with non-financial sector actors. That is because there's a wide variety of systems that aren't uniform in any jurisdiction and across jurisdictions, self-regulatory bodies, and it can pose a significant degree of money laundering risk. There's a great opportunity here to do something about addressing that, but it's complicated. So it's probably right that a paced approach is taken, where the sectors can be mapped, where the various risks can be looked at, and a considered set of policy proposals to address the risk and improve the position can be proposed. And so the opportunity for this new central authority to deal with things in a sequential and paced way so they can deliver effectiveness, which is what this should be all about, can happen in a measured way. I want to say something then about interaction at a global stage. I have the privilege of sitting on the management board of ESMA and in the board of supervisors in the Markets Authority construct, but I also sit in IOSCO, which is a global securities regulator. And I have the benefit of seeing how well received and strong it can be to have a strong regulatory voice at international levels, such as ESMA speaking on markets policy for Europe, but also delivering an alignment with the other countries that are around that table. And I think there's something in that model for the new European supervisor to be a strong advocate for high quality European standards, so we can be a standard setter and persuasive on the international stage. We can drive forward our considerations around bad actors in third countries, and we can be a persuasive and influential voice in FATF with respect to supranational considerations on AML that are always not taken into account as much, I'm sure, as Europe would like in our own approach. So for me, there's a lot to be gained in terms of effectiveness, of clarification and streamlining of the baseline of rules that we're operating against, of strong and effective supervision of entities that pose the greatest threat and risk across Europe, of convergence agendas and higher standards across Europe in competent authorities, and that should be done in a risk-sensitive, data-driven way in any new enterprise that's taken on board. Thank you for your time.
Thanks very much indeed, Derville, for that very important overview, and certainly the point that AML traverses many policy areas and that criminals are no respecter of the boundaries that organisations or state authorities or whatever might be working towards. I'm delighted now to introduce Assistant Garda Commissioner John O'Driscoll, whom I know very well, worked closely with him in the past. He has responsibility for organised and serious crime since 2016. He's had a long and illustrious career in Garda Siochana since joining the force in 1981. And he also, of course, works on this issue alongside the Criminal Assets Board. So really look forward to hearing what you have to say, Assistant Garda Commissioner John O'Driscoll. Thank you, John.
Good morning. Thank you, Francis, and thank you for the opportunity to contribute to this discussion. Just to put things in context in terms of the scale of the problem that we are faced with, the budget that our government has allocated to the Garda Síochána, the National Police Force in this country this year, is edging towards 2 billion. But this morning we all woke up across Europe to hear about a single drug seizure, or two parts of one drug seizure, the total of which it is estimated as a street sale value of between 1 and 3 billion. So therefore, taking the mid-level value, it is equivalent to the total monies that will be spent on the National Police Force in Ireland. And that is the level of problem that we are faced with. There are organised crime groups whose value is greater than possibly some small states. But in terms of tackling the issue, I think as Billy said earlier, money laundering is around a long time, and that is true. But the problem for law enforcement is keeping up with the modus operandi. And to again illustrate the problems we are faced with, in one of the most recent cases where we have laid money laundering charges in this jurisdiction, we seized a significant amount of money. But we searched the premises and seized vehicles. I think it took 3 days to find a concealment in a vehicle where we found vacuum sealed cash. And typically in many of our cases where we have seized money, it has been vacuum packed in hidden concealments and then ready for moving out of Ireland into Europe, where it will move another stage into the money laundering process. Last year alone, the Garda National Drugs and Organised Crime Bureau that I have charge of have prosecuted 34 cases or laid charges in 34 cases relating to money laundering. Another example of the challenge we face is clearly when you're tackling any type of crime, you need to know your criminal, your alleged criminal, and you need to target them. But what if people who maybe our neighbours or sons and daughters have been brought in as facilitators, as we find, for example, in one case being pursued by the Garda National Economic Crime Bureau, where they find 200 bank accounts open for the purpose of money laundering in the names of 22 individuals. We find organised crime groups targeting people who may be our sons and daughters attending universities and asking them to open bank accounts, accessing their bank accounts to facilitate the laundering of money. So that obviously is a huge challenge for law enforcement, and I'm sure the experience of the Garda Siochana is replicated across the law enforcement entities throughout Europe and indeed on a global basis. So dealing specifically with money laundering, we have in recent times developed our Economic Crime Bureau in this jurisdiction to include the Financial Intelligence Unit, Ireland's Financial Intelligence Unit. And to illustrate the extent of workload, I think in 2020, the number of suspicious transactions increased by over 20% compared to the 2019, moving close to 30,000 suspicious transactions in 1 year alone. And the level of investigation, obviously, that must be afforded, or in the first instance, the level of analysis that must be afforded to all those suspicious transactions is considerable, because it is somewhere within the 30,000 or so that we will find those that are of particular interest that can be the proceeds of crime, and indeed maybe financing terrorism, because another obstacle we face in dealing with what we would describe in the past as crime ordinary, to distinguish it from terrorism, we find that those who are involved in drug trafficking, human trafficking, illegal immigration, and many other forms of crime, who have no particular interest in terrorism, are actually causing the financing of terrorism, because they bring on board in their enterprise people who will launder money for them, and they are reckless as to who it is that's facilitating the laundering of the money. But in many instances, as is highlighted by Europol in some of its recent reports, those facilitators who take a cut will put that money into the financing of terrorist activity, which can impact on jurisdictions throughout the globe. Obviously, the extent of wealth of the organizations that we are tackling is such that they have a capacity to influence the political world. They have the amount of power arising from their money can influence elections. We see in more recent times how they have targeted the sport industry, and they are allegedly using that in some cases as a mechanism for laundering their money. And the implications of that on society in general can be quite considerable. The key to targeting or tackling money laundering, as is the case with organised crime in general, is international cooperation. Because if you take the drugs industry in Ireland, and this will be mirrored in other countries, the drugs of use in Ireland, and we take cocaine in particular, it comes from another part of the world, Central America, in the most recent case, most recent seizure in this jurisdiction. We find, as I say, the money that will be the proceeds of that crime, purchasing the cocaine that is sold on the streets of Dublin, will end up, as I described earlier, being vacuum packed and placed in these hidden concealments, and off it goes then to Europe, where someone else along the chain will undertake the next part of the process of money laundering. So it is a significant challenge for us, but obviously is one that, among all the other challenges, we must tackle. In particular, and there has been emphasis in discussion on the FIUs, and for Ireland, there is in recent times an emphasis on developing our FIU, ensuring that it has the capacity to do the analysis of the extraordinary amount of an ever-growing number of suspicious transactions that are taking place. And it is true that the entities such as the FIU, when they plug in at an international level and the information, relevant information shared, that we will get best result. If we're going to undertake prosecutions, there must be ease of prosecution, ease of the process, and simplified process, and that can be facilitated at a European level, as is the case in recent investigations in this jurisdiction, where Eurojust has played a role, where we have joint investigation teams. If you take, for example, another crime category, which is illegal immigration, and the unfortunate circumstances that led to the death of so many people discovered in a container in Essex in England, there is those who were engaged in that process were receiving a sum of money for each of those persons who ended up dying in the process of trying to achieve a better life. And that money it would then circulate throughout various jurisdictions in Europe. It was through Eurojust, and I sat at the table in the early days of that investigation, I think with 5 European jurisdictions, representatives of 5 European jurisdictions, and the member from those jurisdictions at Europol, at Eurojust, where the decision was made where best to prosecute those cases, how best to achieve the most productive outcome to that investigation. And it is, without prosecution, we're not going to impact in any significant way on the criminal entities that we are targeting. But of course, we in this jurisdiction also have tackled it from another perspective through the creation of the Criminal Assets Bureau, through the civil process, which also has a very important part to play in tackling the organised crime groups concerned. Because as has been referenced earlier, it is preventing anything that can be done to prevent these organised crime groups from entering into the legitimate economy. But they have made the money in many cases, they have it, and they are in the process of laundering it. So, as is the case with particular jurisdictions that we are interacting with currently in a number of investigations, where you have the capacity to penalise other people who may interact with those that we have identified as being involved in organised crime groups and in money laundering, that maybe is where the potential rests. So where if these criminal organisations and the companies and the businesses that they own are designated, and anybody who then interacts with them may be penalised, that offers hope where it is so difficult to achieve prosecutions, where we have organised crime groups that may be based in one continent of the globe, where the drugs are coming from another continent and the drugs being sold in yet another. It is clearly a huge task, and it is necessary that we have all the tools that can be made available to us. And we see the FIU, we see Eurojust, we see joint investigation teams, we see the transnational aspect of a lot of new legislation, and the extra jurisdictional capacity to prosecute. These are all the important aspects when we are tackling crime that is at such a global level and has its tentacles throughout the globe. No matter what part or what jurisdiction you look at the problem from the perspective from any particular jurisdiction, there are tentacles throughout the world that must be tackled. Thank you.
Thanks very much, John. Oh gosh, bit of echo there. Very much highlighting the international nature of criminal investigations these days and how challenging that is. Our final speaker before we go on to our Q&As is Colin Moreland. He's Head of Treasury and Trade Solutions for Europe in Citibank Europe PLC, headquartered here in Ireland and is Citi's single pan-European bank with operations in 22 countries across the region. And in this role, he is responsible for leading the development, management, sales, and execution of innovative treasury and trade solution products. Colin, we're delighted you've joined us here this morning. Over to you.
Good afternoon. I'd like to thank Francis Fitzgerald for organising this webinar for the opportunity to contribute to the discussion this afternoon. AML is a hugely important area for Ireland and for Europe. It helps protect the integrity of the financial system, which benefits both customers and financial services providers. Citi welcomes the European Commission's AML Action Plan, in particular the move towards a single EU rulebook and AML supervisor. Citibank Europe, as Francis just stated, is headquartered in Dublin with operations in 21 of the member states. The current approach to AML presents many challenges for financial services providers like Citi, who operate on a cross-border basis around Europe. Some members, as already stated by others this morning, have transposed the fifth Anti-Money Laundering Directive, while others haven't. Also, the way the fourth and fifth Anti-Money Laundering Directives have been transposed differs from one member state to another. One of these challenges is the difference in the approach taken to KYC, and in particular, how to deal with ever-increasing role played by digital technology in customer onboarding. Let me give you an example of this within our Treasury and Trade Solutions business, where we provide working capital solution across our cash and trade products for institutional clients, Fortune 500 national companies, governments, and financial institutions. Citi continually strives to innovate the provision of our services through digital connectivity and online platforms, including Citi Direct BE, our platform for our clients, enabling clients to be onboarded and to perform and initiate transactions without having to physically attend branches. The AML Action Plan recognises the need for AML to evolve, taking into account innovation and the use of digital application for remote customer identification, verification of customer identity, as well as to establish business relationships remotely. There are many different approaches taken on digitization in the delivery of financial services. Some member states have accepted the digital formats of identity documents, in other words, scanned copies, are the same as physical versions, provided they are collected via a secure established channel. Other member states still require independent validation of these documents as a true copy of the original. The required independent validation differs. Some member states look for public notaries, while others require a company lawyer or corporate secretary to validate. For Citi clients operating across different member states, this means providing multiple notarizations or independent verifications for the same individual's identity document. Citi would like to see a harmonization of these requirements across the member states to allow for the collection of digital copies of ID to be captured through established and recognized secure electronic channels. Citi's experience of the implementation of the rules set down in the fifth Money Laundering Directive by member states is that there is significant variation, as already stated this morning, across the member states in the application of the different definitions of signatories and the level of identification and reporting required. This leads to inconsistencies in the application of controls. It is our view that further risk-based and proportionate harmonization of the implementation of regulatory requirements across the EU member states will help to ensure that clients are treated fairly and consistently wherever they are based or hold accounts within the Union. This difference in approach across member states represents significant challenges for financial services companies like Citi in terms of the rollout of technical or central strategic solutions. It also increases both the time and costs of implementation, as well as impacting our clients' experiences. Also, for global companies, it could also influence their decision on where to invest and do their business. Citi would like to see the harmonization and standardization of the data that must be captured across all member states to enable one-time collection of identity information from clients in respect of account signatories. These are just some examples of the challenges faced by financial services firms like Citi operating on a cross-border basis around Europe. Citi invests heavily in AML compliance across Ireland and Europe to protect our customers and the financial system. It is important that all financial services providers, including the newer non-traditional players, invest in AML compliance in order to fully protect the integrity of the European financial system. As the AML Action Plan quite rightly points out, the EU's AML framework is only as strong as its weakest link. Failing in one part of that framework means the EU as a whole suffers financial, economic, and reputational damage. Thank you, and I'll hand back to Francis now.
Thanks very much indeed, and thank you to all of our speakers. I think we've a really good overview of the situation there. There's a lot of chat going on here from those of you who are watching. And I think there's a forum going to be set up amongst a number of you to discuss some of the issues that have been raised. But let me start by taking a couple of questions that I think might be of general interest. First of all, there's a question about the time frame, Sean, for the implementation. You might start with that, but I'll also mention one or two other issues. Elizabeth Hurst from AML Intelligence is asking about the sixth money laundering directive and whether firms have enough time, given the deadlines there, have they enough time for business and financial institutions to get their houses in order to comply, together in order to comply? And then there's an interesting question, which I'm also going to put to you, and that is about the relationship between, and I'll read out the question from Brian Fahy. The Irish DPC have recently publicly expressed issues with firms requesting what is, in their opinion, excessive amounts of AML documentation. Yet AML regulation and its enforcement seems to be going in the opposite direction, and with firms being squeezed in the middle. What actions will the EP be taking to support firms strike a balance between the AML and GDPR obligation and facilitate a common position among AML and DP regulators? I imagine that's quite a common point that's raised. And there's also a question about what supports firms might get in terms of implementing the new regulations. And Sean, I begin with a question. There's an interesting question here. It says, why has it taken us to the sixth anti-money laundering directive to realise that we require a regulation? So I'll let you start with that one. And maybe that's a political one as well. Sean.
Well, okay, you can hear me, I hope. Well, I will simply say that it's not for the Commission's want of trying to get to regulations that we're not taken this long. I think you can go back some years to, a decision was taken some time ago at the political level that anti-money laundering should remain a broadly decentralized function, so that the level of centralization should not be so great. I think it was reflecting this view that a lot of the work that's needed for tackling money laundering and tackling terrorist financing, I think this is something that John mentioned as well. It is very local. I think there was a perception that you need to keep this local element there, because if you didn't keep it there, the system wouldn't work. I think what was appreciated was, of course, what's also become very clear from the conversations we just had, is that money laundering is cross-border and is increasingly global, not just within the European Union, but is now cross-border across the world. So I think as we have sort of understood what we're up against, I think the weaknesses in this sort of very decentralized model, where we leave discretion to national level, have been revealed. Does that mean now that we jump from this decentralized model, which perhaps is too decentralized, to a very centralized model where everything is done in some city, you name it, across Europe? We probably would take a while to pick one, but we could pick one. No, I think the idea here is to find a better balance between what needs to be done centrally in the EU and what needs to be done at national level. Because I think a large part of anti-money laundering remains local. We will continue to rely on local expertise, local knowledge, but clearly a large part of it also is better done together. And that's why what we're talking about now is, learning from experience, and I admit the decentralized system has not worked, because cross-border in particular, this fragmentation, these differences in an application that I think Colin was mentioning, have led to gaps, spaces in which the criminal can work. Derville said that fragmentation is in fact the ally of the criminal. They spot the gaps. So we in the Commission probably would have liked a more centralized system some time ago, but we're often accused of being serial integrationists, so we have to be careful. But I think our advice has become clear that we do need more integration. But this is not to suggest that you can run an anti-money laundering operation from a center in Europe, which is 3,000 kilometers away from where the money laundering is actually happening. So there has to be this interaction between, and this is going to be really important and a very difficult balance to find, because there will be political implications there as well. But I think if we can get that balance right, we can correct the mistakes. So the answer to the question is why it took so long is that people hoped that this decentralized model would work. We thought it was perhaps the best, but evidence suggests it is not. And this comment, which is taken from our plan, but I'm glad Colin has mentioned it, of the weakest link being the most important link in any anti-money laundering effort, is very, very true. We're not suggesting, and we don't suggest in our plan, that all anti-money laundering arrangements across Europe are poor. But we do know that the quality varies from place to place. And when you have an integrated system, of course, that's the weakness. Your weakest spot is the one you have to worry about. So on some of the other questions about administrative burden, of course, I spend most of my life talking about the trade-off between administrative burden and effectiveness of regulation. And we have this discussion of proportionality. And it's an important one, but it's a difficult trade-off to find, because to be effective, you need information. To get information, you need reporting. And therefore, you have to have those reports, and they can be quite heavy. And then lastly, in terms of trade-off, another trade-off is timing. So this other question about timing. We always have to, when we present legislation, our political masters are rightly always, anxious to put this thing in place as quickly as possible. There's typically a problem, and the faster you address that problem, the better. In AML, it's exactly the same. We have a problem quickly. We want to address it as fast as possible. That, of course, implies some ambitious timelines. But again, we try to get that trade-off right as well. I'm sure from the industry point of view, it probably isn't the right one. But then if we go slower, from our political point of view, it's not the right one either. So it's about finding a balance again between the need to be on time and the need to give the industry enough time. But typically, I think we get that balance about right. We normally make both sides equally unhappy, and that's how we do it.
Okay, Sean. Derville, can I go to you next to ask you about that question on GDPR and AML, and kind of, are there tensions between the two? Ordinary citizens know how much questions can be asked of them now, whether it's opening bank accounts or transactions or whatever. What about those balances when it comes to, is there a tension, do you find, or what are the issues in relation to it?
So, Francis, maybe I would say this, but I think that these two legal frameworks are really important. Obviously, general data protection is about the right to your privacy, a right, being clear about information being gathered, who's controlling it, the purposes that it's used for. Very, very important, particularly in the modern age. And GDPR in Europe is seminal in what it has sought to do and achieve on data privacy and data rights. But anti-money laundering is also, and there's no lack of law at a European level, a very significant and important public interest pursuit to protect us and all of us against criminal enterprises misusing our systems and laundering the proceeds of crime. There is a way to read these two public interest imperatives consistently and together. I have heard discussion or debate between the two pieces of legislative foundational rights. I think we have to work harder to put a specific interpretive framework in place to make sure we can gather these two fundamentally legitimate objectives and make sure we get the detail and clarity about making them work together. I think that requires us to make sure that there isn't a perception of inconsistency between them, because I don't believe there is. I think they both serve legitimate aims and can be knitted together well with that compatibility framework to deliver deliver us into a place beyond ambiguity. In terms of administrative burden, I'll defer to Sean on making everybody a little bit unhappy is the way to get balance. But I also think there's something in what Colin was talking about, which is consistency. It's a frontline business. And if the new regulation tackles some of the key issues and the points under which we acquire relevant points of information to defeat money laundering, know your client, CDD, if we could get consistent application, consistent proofs, consistency across the European Union of ways to prove identity, ways to prove signature, one will eradicate unhelpful fragmentation, unhelpful bureaucracy, paperwork that drives energy but not efficiency, because what we're after is more light than heat here. So really targeting what we want, how we want it, wider adoption of electronic approaches for legal entity identifiers for company would go some way towards clarity of identity, EIDAS systems where we could make sure that online is more widely adopted in a uniformity. So there's a lot of steps that we can take to drive out unnecessary bureaucracy, but I do recognize that it's a work in progress.
Anybody else, anyone else in our panel like to come in on any of the points raised so far, or shall I move on to another question? Sinead Reynolds has put in two questions here. One is on the need for improvement. We all agree on the need for improvement, but do you agree that a regulation poses difficulties given different legal bases in member states, and any regulation needs to take this into account? Is there a risk of a disproportionate effect on citizens in some member states due to this? And another interesting question on the UK and Brexit and equivalence and how this might impact on this issue. Who'd like to take up either one of those?
Well,
Colin?
okay.
Would you come in there?
Yeah, look, I'll just be brief. I mean, regulation versus directives. I mean, obviously regulations are more burdensome on member states, and that's the idea of a regulation. It is to oblige or to force the member state to act, as opposed to it just interpreting a directive loosely. And we have to be honest, like Assistant Commissioner O'Driscoll outlined, the sums of money are huge in terms of money laundering, drug importation, etc. So, I mean, if you have countries that are outside the scope of strong, robust anti-money laundering legislation in the European Union, well, then they will become a target. And without naming countries, I mean, let's be honest, some entities, they may be skirting very close to the political elements within those countries. And that would be a very serious concern. If you actually had a situation where you had weak governance in a country, you had a weak legal system in a country, and it became the gateway to Europe for money laundering. And, there's always concerns in that particular area. So regulation might be more burdensome, but I believe that it is the only way to go in terms of getting uniformity across the country or across the European Union. Yes, there is differences in terms of civil code and common law, but, I think we have to accept that the enforcement element of a country will be done through whatever legal codified system they have, but the regulation itself would have to be acted upon within those countries. So the prosecutorial issue could be challenging, but that would be for the individual member states, but the regulation should be entirely across the European Union. In terms of equivalence, like there's a memorandum of understanding at the moment that is being discussed. That is primarily around the issue of the regulatory aspect of oversight in terms of the European Union and the UK. And yes, of course, if you had a dropping in standards of the UK or any other third country that wanted to deal and apply for equivalence with the European Union, well, money laundering and certain standards of ethics and morality would have to be a benchmark. Otherwise, you could have a situation where a country could drop its standards. You could have a lot of, dirty money washing through a system, and yet they having access to European markets on the same basis. So clearly, when we talk about equivalence, I firmly believe, and my political grouping does, and I know that others do as well, that any money laundering legislation and regulation would have to be very robust in those third countries as well.
Thanks, Billy. Sean, could I go to you on that question from John Clark? The biggest financial centre in Europe is London, post-Brexit, and given the move to an EU ML regulation, how will the awaited equivalence of the UK market be assessed? That's a big question, but if you'd like to maybe just give us a quick response on that. We're coming towards the end.
Yeah, I think Billy has already sort of laid it out in a sense. There's no specific equivalent regime for anti-money laundering, okay? So we have a specific third country framework for anti-money laundering. So countries outside of the EU are subject to the FATF arrangements plus. So we look at what FATF do, and then we have some additional requirements ourselves on in some cases, particularly around beneficial ownership, where we have a slightly tougher regime than others. So there's a separate regime for that. But of course, I think, as Billy said, if there's a perception that a third country has a very loose anti-money laundering arrangement, and where that regime, from that perspective, even if it's equivalent in other parts of its potential regulation, is going to cause a huge threat to the EU, that of course would be one of those factors taken into account. But there's no, as I said, direct link between anti-money laundering and an equivalence decision, for example, in the space of trading. So they are separate processes. But Billy is right, of course, that in any equivalence decision, beyond what you look at in the assessment of the regulatory framework and in the compliance of the infrastructure or the institutional framework you're looking at, you have to take a broader view as well. I'm not going to comment on what the UK's anti-money laundering framework is. It's not the place to do that now, but this is how it will be handled. So there's no direct equivalence decision in AML, but of course it's a factor taken into account.
And a quick question, Sean, to you. Do you agree that it's critical that any regulation must take account of Ireland's unique position as a common law jurisdiction?
Well, obviously, we're not about changing the legal frameworks of the member states, and we will have to take account of this. But there are plenty of regulations that apply to Ireland as a common law country and apply to the UK, by the way, as a common law country. So it's not that we use regulations to fundamentally alter the legal framework of member states. We know how to do it. What it does mean, however, is that you have to be careful. So we have experience of what we call combined directive regulations. So the MiFID, for example, the market in financial instruments, has a directive and a regulation. The capital requirements has a directive and a regulation. So we know that there are some areas where you have to leave outside the regulation and are handled in a directive context. I'm pretty sure that's how we're going to do it for anti-money laundering as well. So we will have some areas covered by a directive where we're simply not able to, or we don't see a need to, harmonise the regulations, or harmonise the rules, I should say, to minimum harmonisation. And in those other areas where we can, we will do so. And we have some expertise in this. We have done it before, and we will do it in this space as well. I understand there are some specific issues around money laundering in Ireland. We'll have to handle those, but I'm pretty confident we will do it.
Thank you. As we're coming to the end of our Q&A, and I do thank everybody who's made the comments. I'll make sure they'll all reach our panel members as well, even though we haven't been able to get to specific questions. I hope you've got a strong flavour of the issues involved in anti-money laundering. I'm going to ask our panel members to maybe give a quick sentence each in conclusion of the seminar. And thanks again to everybody who has participated, all the questions that have come in, and to the panel for their time, and of course the European Parliament Office for facilitating this event. But a quick word from each of our panellists. I'll start with Derville.
Better together.
Okay, that's it. That's always true. Complementarity, I suppose. John. You're muted. John.
Apologies.
Yes,
yeah, I think the emphasis from the law enforcement perspective is increased cooperation at an international level, and all that can be done to facilitate that will greatly facilitate us.
Colin?
I think what has been said a number of times, consistency, and I think that's the key thing. And I think when John was talking about, any other jurisdiction, this is not a competitive thing, you know, that you can go up or down in AML. We need everybody to have the same level across the globe. So I think that's probably the main message I'd give.
I think you've made that point. In business, that's absolutely critical to have that consistency as a business operating across Europe, and that would apply to so many businesses. Yeah. Thank you, Colin. Billy.
Well, 23 tons of cocaine were discovered yesterday in the European Union. It goes to show the huge sums of money involved in illicit trades, terrorism, drugs, prostitution, people trafficking. So, you know, we have to root it out and we have to discourage it at every possible level. So let's get on with the anti-money laundering regulation and make it difficult for these criminals.
Thank you, Billy. Very clear message there. Absolutely agree with you. And Sean, a final word to you.
Justice, I mean, we are in the Commission and the financial legislator across the piece. We are not experts in AML per se, and it's very reassuring that when we appear on panels like this with experts in various levels of this activity, that they seem to agree with the general approach that we're following. So that's very reassuring, and I can guarantee them that we will be, as I'm with the proposal forward, and then we will wait to see what you and Billy can do to improve it even further.
Thanks a lot, and thanks everybody for all of your work in this very important area. Really appreciate your time this morning and expertise. I hope all the participants have enjoyed it as much as I have. And just to say that a recording of this webinar will be available on the European Parliament office and on my website in due course. So thanks again, everyone. I think it's been a really interesting discussion today. Thank you.
Thank you.
Thank you.